Welcome back to Market on Close. I'm Marley, Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. We'll close our show how we do every day with some final thoughts on the session. Again, another record-breaking session for the S&P and the NASDAQ. Gold prices also continued rallying above that $4,000 level for the second day, building on its record-breaking gold rush rally. Gold is handily outpacing the equity markets, and Bitcoin up 54% so far this year. Last year, the safe haven metal gained 27% in the entire year. In our conversations with guests, including our previous guest, Joe Cavatoni, gold rally is expected to stay at these elevated levels as we continue to see a rush to safety alongside record ETF inflows and a weaker dollar. We also got the Fed minutes, and the Federal Reserve officials were largely united in deciding to cut interest rates in September. The weakening labor market was cited as a major and primary concern, though they disagreed on how many more cuts should follow this year. Most supported 2 or 3 total reductions in 2025, including the quarter-point cut we got in September. The Fed's projections showed a narrow 10-9 split, favoring 2 more cuts before the year end, with further slower easing expected in 2026 and 27. The only dissent came from new Governor Stephen Miron, who wanted a larger half-point cut. Now, some officials urged caution, noting that financial conditions might not be as restrictive as assumed, of course, meaning inflation there. Sam, what caught your eye during today's session?
Well, while we continue to see this rebound and these records set by the S&P 500 and the NASDAQ, there were still 4 sectors under pressure and that were down today. And one of those was the energy sector, lower despite crude prices being higher, which I mentioned earlier. Now, crude has picked up. It's up over 1% today, and that comes after what has been described as a modest production hike by OPEC+. It was smaller than expected and seemingly more restrained, which is easing some of those supply concerns. So that's providing some support there. But it was also interesting as far as, technology really leading the charge as well. I just wanted to note something that sort of quietly rallied again today was AMD, Marley. So it continues sort of its winning streak off the back of what we've seen from OpenAI. But I'm just wondering, what will you be watching out for tomorrow?
Yeah, AMD had that quiet rally all the way to being the best performer on the S&P 500 today. As far as tomorrow is concerned, earnings. Pepsi will be reporting its third quarter earnings before the bell in the morning. Companies expected to report a modest decrease in profitability on growing sales year over year. Now, this stock has significantly underperformed its industry peers. It's had an 18% decline year to date. The broader soft drinks industry has gained more than 1%. Headwinds like rising production costs, tariff impacts on key materials like steel and aluminum, and softening demand for sodas as the consumer becomes more health conscious will likely be front and center. Also, Elliott Management revealed its $4 billion stake in the company last month. So any details on their involvement in Pepsi's strategic planning will be very important there as well. And also to mention, Delta is slated to be the first airline to report earnings also tomorrow. And their results, according to analysts, may be the best that we see in the industry. How about you, Sam?
Yeah, look, it's going to be really interesting to hear sort of the first cab off the rank in the airline space, particularly given that, the premium segment has been holding up well. Let's see if that continues. But so far, the trend has been that things haven't been as bad as they thought it was going to be at the start of the year. So let's see if they can keep it up. But we're also going to be going to get Levi Strauss's earnings tomorrow, and that's coming after the bell. So we'll be talking about this one this time tomorrow. We want to hear about how it's navigating tariffs after it says it's working to absorb some of the costs. It has about 1% or so manufacturing exposure in China, but it does also source from Southeast Asia, which has been also the subject of tariffs. So we also want to get an update on some of the pricing, innovation, and consumer trends, given they have been constructive on the consumer, that is, the company has been, which they say is resilient and a fan of the brand. So they've got resilience and brand loyalty there, and that demand has led to the company actually hiking its full-year revenue guidance, but does anticipate some of that tariff impact to weigh on margins and profits. So obviously we're going to be combing over a couple of earnings reports tomorrow. We know that, of course, with Levi Strauss, denim has been back. So we're going to be getting Obviously, a bit of a temperature check on the consumer, particularly also from Delta, how people are wearing jeans, how people are traveling. So that's going to be really interesting, and also how they're eating and drinking, Marley. So, a big health check very much on the consumer.
Absolutely. And I saw a very interesting report earlier today that Gen Z is really the driver behind Levi's as they move away from this athleisure category and really favor denim. Although I know we've discussed the rise of the jegging coming back. So I'm sure if it's real, Levi's will get on it. But that's going to do it for us today on Market on Close.